With any numbers or statistics that seem out of the ordinary, it's usually a good idea to take a look under the hood to see what's really going on. Quarter one is in the books, and in this Boston, Greater Boston market update, I'm going to answer the number one question that I've been receiving, which is, have real estate prices been affected by the higher interest rates, and by how much? We'll also touch on the biggest X factor contributing to this current real estate market. We'll discuss interest rates, and of course we'll break it down. What does it mean for homeowners, home buyers, and home sellers? First, let's take a look at a statement that I made about 6 weeks ago. Earlier in the year, I made a prediction that housing prices here in Massachusetts would either be flat or up somewhere up to 5%. I took the time to break down the top 30 Greater Boston suburbs on median price point, and if you take a look, some of these towns are seeing significant price drops. And you might be thinking,
let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
And you'd be right, except then we have these 10 towns over here which are seeing dramatic price appreciation.
This is interesting.
Now let's take a look at that last third that's right in the middle. We're going to zoom in right on that median price, and you can see that it's really about down 2% or up 0.5%, which is basically in line with the prediction that I made about 2 months ago. But what about the city of Boston and the Boston condo market? Taking a look at this chart, you can see we have a sampling of various neighborhoods in the city, and actually the majority of them are up from last year, but you still see that a handful are down. However, you can't just take things at face value. If we take a look at Brighton, median price point up 66% from the last 2 years. Now, why is that? It's because there's a couple of new condo buildings that finished completion and are now starting to close on the sales, and those price points are significantly higher than what the median price point has been in Brighton for the last couple of years. With any numbers or statistics that seem out of the ordinary, it's usually a good idea to take a look under the hood to see what's really going on. Now, before I give myself too big of a pat on the back, all of this has to be taken with a big grain of salt. I really don't like to compare just one quarter of data to the previous year. This isn't the S&P 500 where we need to report quarterly earnings.
And how fiscal will the quarterly earnings be?
Some of these towns have had less than 10 sales in the first 3 months of the year, and that's going to greatly skew the numbers, either the positive or the negative. These numbers are going to continue to fluctuate as the year progresses, but I think the majority of these towns are going to end up in that 0% to up 5% in terms of appreciation, with a couple of outliers in either direction. The biggest,
The X factor
contributing to the current real estate market is the lack of inventory. You can see by this chart, for total inventory over the 5 past Easter weekends, how far off we currently are from the last, what I consider a normal year of 2019. Some of the more expensive towns and the higher price points have seen increased inventory, but even those are not back to pre-pandemic levels. I will tell you this, any offer I've submitted recently on a house that's priced in the median price point of that particular town has been receiving multiple offers. If you're between Boston in the I-95 corridor, single-family homes priced in $700,000 to $900,000 are extremely competitive. Even in towns like Arlington, Belmont, Winchester, Lexington, single families in those areas priced around the $1.5 million mark are almost always going after the first weekend on the market. And now this is where I ask you to very quickly tap the like button. If you find this information valuable and informative, it lets me know to keep making these market update videos for you. Moving over to mortgage rates. It is my opinion that as long as rates stay above 6%, that is high enough to dissuade the majority of sellers from listing their home, therefore keeping supply low and prices stable. The gap between their current mortgage rate and their future one is just too high, and homeowners are choosing to renovate or expand their current residence, or if they are buying a new home, they're choosing to hold on to that original property and keep it as a rental.
I mean, I think in this market, real estate is your best investment.
My opinion is if we can get mortgage rates into the 5s, that will spur a lot more sellers to list their property and create many more options for current home buyers. One quick note on the rates. I do work with some lenders who are already lending in the 5s and low 5s if you're putting down 20 to 25% and you have excellent credit. If you're a homeowner, I don't see home prices going down no matter whether rates are up or rates are down. If rates go up, that just creates less home sellers, and there's enough demand to keep the prices stable. If rates go down all the way to, say, 4.5%, that'll get more sellers onto the market, and again, keeping the prices stable or probably appreciating even more. The only way that I would see buyer demand dropping off is if rates went all the way up to 8%, but with SVB and some of the other regional banks collapsing in March, I don't see the Fed doing rate hikes that are going to go that high. In my mind, that scenario is unlikely to happen. If buying a home is a goal of yours in 2023, then it is crucial right now to understand your local market. If we take a look, for example, at Lexington, inventory is double compared to last year. However, 75% of those homes are at 2.5 million or above. So if you have that kind of budget, then yeah, you're going to have some options and some negotiating power in that particular price segment in that town. If you have a budget of, say, $750,000 and you're zeroing in on a town like
Melrose, now the 7th hottest zip code in the country.
Right now, there's one home on the market that is at $800,000 or below. So going into that, you have to understand it's going to be super competitive, and your offer is going to need to be aggressive, both in terms of price and the contingencies that you're putting with that offer. The good news is we are past Easter weekend, and this is where the bulk of the inventory starts coming on. I would expect inventory to continue increasing steadily for the next 10 to 11 weeks, all the way up to July 4th. Plus, last week, interest rates hit their lowest in 2 months. So I'm hoping this causes a little bit of a perfect storm that incentivizes even more sellers to list their home in the next few months. If I'm a home seller in 2023, I'm working my hardest to get listed in April, May, or June because buyer demand is always stronger in the first half of the year compared to the second half of the year. And home prices, especially equal homes, will sell for more money that were listed in January through June compared to July through December. Presentation and price are super important right now. Homes that are clean, organized, staged well, and priced a little bit below market value are almost always going on the first weekend with very strong offers. Here's a pro tip for you. Remember, buyers make a judgment on the home within 3 seconds of walking in through the front door. So here's what you should do. Walk out your front door, turn around, walk back in. And then observe everything you see from that vantage point, putting yourself in the shoes of a buyer so that way when they walk through the front door of your house, the first image they get is absolutely perfect. Thank you for watching. We'll see you on the next one.